Dana, let's talk a little bit about the Canadian economy. We're going to get deeper into the markets in both Canada and the United States. But, when you take a look at the Canadian economy, we've essentially had no growth here, but you say it's not too bad. What does that mean?
It's not negative. Um, we could do a little better on the employment number. We have a problem with youth unemployment. But I think one of the things that um, the Trump administration tariffs has done, and this would have been unexpected, is it allowed countries, and that includes Canada, to sort of look inside and see what we could do better. We're seeing Prime Minister Carney trying to diversify the economy through, going directly and talking to Mexico or going directly to Europe. There is a call to support our commodity industries better. um, you never know. There might be some positive developments coming out of what was a couple of decades of comfort that we didn't need
Mm,
to really look
hmm
inside our own place, and then maybe we can do a little bit better. So you see, our market is up 20% year to date.
hmm
That's better than the S&P 500, and so are many other global markets. And we are part of this global allocation. If you step outside of our country and you look at allocators allocating money to sectors and countries, we would we would fit into the global bucket ex-US, and that benefits us.
Well, in some ways, we got lucky. In many ways, actually, I think because of all the uncertainty, concerns about central bankers around the world, lowering rates, their monetary policies, pumping money into the system, that gave gold a real bid. So, of course, the TSX benefits from that. They also benefit from the big tech giants in the United States and the demand for AI, for lithium and energy out of Canada. So, it's not as though we're benefiting from some of the big themes that other countries have been fueling and empowering themselves. In other words, I think that we could be doing so much more internally in Canada. I think most people would agree with that. And we're kind of maybe getting a little bit lucky here, Diana.
But also the banks, the last quarterly report on the banks, they all did very, very well. Um, you're right. We've had Celestica, and we had commodities. We've had uranium, and now, Imperial Oil, for example, it rallied. It's been doing really well all year. It's one of those large caps that global investors, when they come to invest in Canada, they would, of course, buy the mega caps locally,
Hmm
which would be Imperial Oil, CNQ, Suncor, those kinds of things. So they've benefited from these global flows as well.
hmm At the same time, too, we've seen so much foreign direct investment leave Canada over the past 10, 15 years. So there's still a concern to me, anyway, from a economic perspective in Canada. Particularly, it's great that the banks have been doing well, but do you have concerns about the housing market and really where growth is? And we know that we fall very short versus global peers on a productivity frontage. So I'm just concerned that we'll see that play out in employment, in the housing market, in affordability. And then what does that mean for the banks? Like, I really wonder if we want to continue to hold these banks, if there's an opportunity to buy more, or do we sell or trim?
That's a great point. We have to differentiate between the stock market and the economy, especially in Canada. It's not that reflective. And everything that you say is a risk for sure. Rates have gone down quite a lot in Canada. And there's a feeling that in the condo market, for example, that we're closer to the bottom than we are to the top. In terms of people's affordability, look, their mortgage rates have gone up and their monthly payments have gone up quite a lot, but they've managed to hold in. We haven't seen any real problems there. Um, and unemployment has inched up. So so far so good. Not that there's not a risk at all. From
Hmm.
an investing perspective, though, the banks also have exposure to businesses, and their net interest margins were very, very good. Um,
Hmm.
but yeah, I mean, the economy slowing is always a risk.
Okay, we'll take a quick break. We'll be right back.